Let me share something with you that I have never discussed publicly before. Over the past 2 years, I have been approached by governments and investment groups from over 30 different countries, all of them wanting to build AI manufacturing capacity. They wave incentive packages worth billions of dollars. They promise regulatory fast tracks and dedicated workforce training. They show me beautiful renderings of gleaming new facilities that will transform their economies into AI powerhouses. And I turn almost all of them down, not because I do not appreciate their ambition, not because I doubt their sincerity, but because I have learned something over 40 years in the semiconductor industry that most policymakers and investors do not understand. Manufacturing artificial intelligence chips is not like manufacturing cars or consumer electronics or even traditional semiconductors. It is among the most complex industrial activities that human beings have ever attempted. And there are only 2 countries on Earth where I would actually invest money to do it. That might sound arrogant. It might sound dismissive of the legitimate aspirations of dozens of nations trying to participate in the AI revolution. But I am going to explain exactly why I have reached this conclusion, and I think by the end you will understand that this is not arrogance, it is hard. 1. Wisdom about what it actually takes to manufacture the chips that power artificial intelligence. Let me start by explaining what makes AI chip manufacturing different from other types of manufacturing, because this is where most people's understanding breaks down. When politicians talk about bringing semiconductor manufacturing to their countries, they often compare it to automotive manufacturing or electronics assembly. They think about building factories, training workers, and creating supply chains. Those are necessary, but they are not sufficient, not even close. Manufacturing an advanced AI chip requires precision at the atomic level. I mean, that literally, the transistors on a modern AI processor are measured in nanometers. A nanometer is 1/1000th of a meter. The features on these chips are smaller than the wavelength of visible light, which means you cannot even see them with a regular microscope. You are manipulating individual atoms, billions of them, with perfect precision, billions of times per chip. To achieve this precision, you need equipment that pushes the boundaries of physics. The lithography machines that pattern these chips cost over $300 million each and weigh multiple tons. They use extreme ultraviolet light generated by vaporizing tiny droplets of molten tin with a powerful laser. The mirrors that focus this light are polished to within a fraction of a nanometer, making them the smoothest objects ever manufactured by humans. There are only a handful of these machines in the world, and there's only one company that makes them. But the equipment is just the beginning. You need thousands of engineers who understand not just how to operate the equipment, but how to optimize it, troubleshoot it, and push it beyond its design specifications. You need materials suppliers who can provide chemicals and gases with purity levels measured in parts per billion. You need infrastructure that provides vibration, free floors, ultra-clean air, and perfectly stable power and water. You need a supply chain ecosystem where hundreds of specialized companies work together with precision timing. Building all of this from scratch in a country without an existing semiconductor ecosystem is essentially impossible. Not difficult, not expensive, impossible, at least on any timeline that matters for the current AI revolution. I have watched countries try. I have seen billions of dollars invested in state of the art facilities that never achieved competitive yields. I have seen projects delayed by years because specialized suppliers did not exist locally and international suppliers prioritized established customers. I have seen beautifully designed factories sit idle because there were not enough trained engineers to run them. This experience has taught me that successful AI chip manufacturing requires more than money and ambition. It requires a foundation that takes decades to build, and there are only 2 countries that have that foundation. The first country where I would invest in AI manufacturing is Taiwan. This should not surprise anyone who follows the semiconductor industry. Taiwan, and specifically Taiwan Semiconductor Manufacturing Company, represents the pinnacle of chip manufacturing capability that humanity has achieved. Let me tell you what makes Taiwan exceptional, because it goes far beyond just having one successful company. Taiwan has been building its semiconductor ecosystem for over 50 years. The government made a strategic decision in the 1970s to focus on electronics manufacturing. They created research institutes to develop technology. They provided incentives for companies to locate there. They invested in education to create a pipeline of engineering talent. Generation after generation, they refined this ecosystem until it became the most sophisticated in the world. Today, Taiwan produces over 90% of the world's most advanced semiconductors. Not just any semiconductors, the most advanced ones. The chips that power smartphones, AI systems, high-performance computing, everything that requires cutting-edge processing capability. This concentration of capability is unprecedented in any industry. The ecosystem extends far beyond TSMC. There are hundreds of companies in Taiwan that specialize in different aspects of semiconductor manufacturing. Companies that do chip design services, companies that do packaging and testing, companies that supply specialized chemicals and materials, companies that maintain and service equipment, companies that provide specialized logistics for extremely sensitive components. All of these companies have decades of experience. Their engineers have solved problems that engineers elsewhere have never encountered. Their processes have been refined through millions of production runs. Their quality systems have achieved defect rates that seem impossible to outsiders. When I need something manufactured in Taiwan, I know it will work. Not because I hope it will work. Because the ecosystem has proven itself over decades of increasingly complex challenges, that certainty is worth more than any government incentive package. The talent base in Taiwan is also extraordinary. The engineering programs at National Taiwan University, National Tsinghua University, and National Chiao Tung University produce graduates who are immediately productive in semiconductor roles. Many of these programs were specifically designed in collaboration with industry to ensure relevance. The students learn on equipment and processes that match what they will use professionally. Beyond formal education, there is institutional knowledge that cannot be taught in classrooms. Engineers who have spent 30 years optimizing manufacturing processes, technicians who can diagnose equipment problems by sound and feel, managers who understand how to coordinate thousands of people across complex supply chains. This human capital took decades to develop and cannot be replicated quickly. The infrastructure in Taiwan is also purpose-built for semiconductor manufacturing. The industrial parks have vibration, damped foundations. The power grid provides the stability that sensitive equipment requires. The water treatment facilities produce the ultra-pure water that chip manufacturing demands. The logistics networks are optimized for just-in-time delivery of sensitive components. All of this creates a capability that no amount of money can quickly reproduce elsewhere. When people ask why semiconductor manufacturing cannot simply be moved to other countries, they are underestimating the complexity of what has been built in Taiwan over 50 years. Now, I know what some of you are thinking. What about the geopolitical risk? Taiwan sits in a precarious position relative to China. There is genuine uncertainty about the future of cross-strait relations. Any serious investor has to consider what happens if that situation deteriorates. I take this risk seriously. I would not dismiss it. But I would also not overweight it to the point of ignoring Taiwan's extraordinary capabilities. The scenario where Taiwan's semiconductor industry is destroyed or captured is a scenario where the global economy faces catastrophic disruption regardless of where individual investors have placed their bets. The entire technology industry depends on Taiwan. Avoiding Taiwan does not protect you from Taiwan risk. Moreover, the world has strong incentives to ensure Taiwan's semiconductor industry remains operational and independent. The United States, Japan, Europe, and many other nations depend on chips from Taiwan. They have economic and strategic reasons to support Taiwan's security. This does not eliminate risk, but it provides some mitigation for AI manufacturing specifically. Taiwan offers capabilities that simply do not exist elsewhere at comparable scale and sophistication. If you want to manufacture cutting-edge AI chips, Taiwan is where the expertise lives. That reality shapes my investment decisions regardless of the geopolitical complexity. Let me share a story that illustrates what I mean about Taiwan's unique capabilities. A few years ago, we were developing a new AI processor that pushed the boundaries of what was physically possible. The design required manufacturing precision that had never been achieved at scale. We had theoretical models showing it could work, but no one had actually done it in a production environment. We took the design to TSMC. Their engineering team spent months working with us, identifying problems we had not anticipated, suggesting modifications that improved yield without compromising performance. They developed new processes specifically for this chip. They achieved yields that our own simulations had predicted were impossible. When the chips came off the line, they performed better than our specifications. Not because we had been conservative in our targets, because the manufacturing was better than we had any right to expect. That is the kind of capability that exists in Taiwan, and essentially nowhere else. I want to emphasize something about the human element in Taiwan's semiconductor industry, because it often gets overlooked in discussions that focus on equipment and technology. The culture of precision and continuous improvement that pervades Taiwanese manufacturing is extraordinary. I have visited factories around the world. The difference in Taiwan is palpable from the moment you walk in. The attention to detail, the pride that workers take in their output, the relentless focus on improving every aspect of the process. These cultural factors are as important as the physical infrastructure. Young engineers in Taiwan grow up aspiring to work in semiconductors the way young people elsewhere might aspire to work in finance or entertainment. The best students compete fiercely for positions at TSMC and other leading companies. They view semiconductor manufacturing as a prestigious, intellectually challenging career that contributes to national success. This cultural foundation cannot be manufactured or purchased. It developed organically over decades as Taiwan built its semiconductor industry. It creates a self-reinforcing cycle where success attracts talent, which enables more success. Other countries trying to build semiconductor industries cannot simply copy this culture. The density of the ecosystem in Taiwan also creates advantages that are hard to appreciate from outside, within a few hours' drive. You can access virtually every capability required for semiconductor manufacturing. Suppliers, service providers, equipment specialists, research institutions, all of them are nearby and deeply experienced. This density enables a speed of iteration that is impossible elsewhere. If you have a problem with a manufacturing process, the experts who can solve it are an hour away. If you need a specialized component, the supplier can deliver it the same day. If you want to test a new approach, the infrastructure to support experimentation is readily available. I have worked with manufacturing operations in many countries. The friction of operating in places without this ecosystem density is substantial. Everything takes longer. Problems are harder to solve. Innovation is slower. The cumulative effect of this friction is enormous over time. The second country where I would invest in AI manufacturing is the United States. Now, this might seem obvious given that many technology companies are headquartered here, but my reasons are more nuanced than simple home country bias. The United States has several advantages for AI manufacturing that are often underappreciated. First, the United States has the most advanced semiconductor equipment industry in the world. While Taiwan excels at manufacturing, the equipment that makes that manufacturing possible largely comes from American companies, Applied Materials, Lam Research, Kelly Corporation. These companies produce the tools that deposit materials, etch patterns, and inspect quality in semiconductor manufacturing. Without American equipment, advanced chip manufacturing is not possible. This equipment expertise creates a foundation for expanding manufacturing capacity. The engineers who design and build these tools understand semiconductor processes at a fundamental level. They can support new manufacturing facilities in ways that create advantages over facilities in other countries. Second, the United States has the research infrastructure that drives semiconductor innovation. The national laboratories, the university research programs, the corporate R&D centers, all of these produce advances that eventually make their way into manufacturing. Being close to this research creates advantages in adopting new technologies and solving novel problems. Third, the CHIPS Act has created significant incentives for semiconductor manufacturing in the United States. Tens of billions of dollars in subsidies, tax credits, and research funding are available for companies that build manufacturing capacity here. These incentives change the economics of manufacturing in ways that make previously marginal projects viable. I want to be clear that I do not think government subsidies alone can create a competitive semiconductor industry. They are necessary but not sufficient. But when combined with existing advantages in equipment, research, and talent, the subsidies tip the balance toward investment. Fourth, the United States has a large and growing market for AI chips. Proximity to customers matters in semiconductor manufacturing. Being close to customers enables faster feedback cycles, easier collaboration on custom requirements, and reduced logistics complexity. The major AI chip consumers are American technology companies, and having manufacturing capacity close to them creates advantages. Fifth, and this is increasingly important, national security considerations favor domestic manufacturing. The United States government is deeply concerned about depending on foreign suppliers for critical technology. They are willing to pay premium prices and accept less than optimal efficiency to ensure secure supply chains. This creates a market for domestic manufacturing that would not exist based purely on economics. Now, let me be honest about the challenges of manufacturing in the United States. Labor costs are higher than in Asia. The regulatory environment is more complex. The supply chain ecosystem is less developed. Building a semiconductor factory in the United States costs significantly more than building an equivalent factory in Taiwan. I have seen the numbers on recent projects. Facilities that would cost $5 billion in Taiwan cost $15 or $20 billion in the United States. The timelines are longer because permitting and construction face more obstacles. The operating costs are higher because of wages and utilities. These challenges are real and should not be dismissed, but they are manageable, especially with government support and long-term strategic thinking. The question is not whether manufacturing in the United States is as efficient as manufacturing in Taiwan. The question is whether the advantages of geographic diversification, supply chain security, and customer proximity justify the additional cost. For AI manufacturing specifically, I believe they do. The AI chip market is large enough and growing fast enough that some premium cost is acceptable. The strategic importance of AI creates willingness to pay for security. The customers value having domestic supply options. Over the next decade, I expect significant AI manufacturing capacity to be built in the United States. Not enough to replace Taiwan, but enough to provide a meaningful alternative. This capacity will be more expensive than Asian alternatives, but it will exist and it will matter. Let me give you more context on why I am optimistic about American manufacturing despite the challenges I mentioned. The United States has a history of rising to manufacturing challenges when the strategic stakes are high enough. During World War II, the United States transformed its industrial base in ways that seemed impossible beforehand. Automobile factories started producing tanks. Shipyards that had never built warships launched vessels at unprecedented rates. The entire economy reoriented around manufacturing priorities. The results exceeded what anyone had predicted. I am not suggesting that AI chips are equivalent to wartime production, but the principle applies when the United States decides something is strategically critical, resources flow, obstacles get removed, and things that seemed impossible become achievable. The current moment has that character. Policymakers across the political spectrum agree that semiconductor manufacturing is strategically important. They are backing that agreement with real money and real policy changes. The CHIPS Act is just the beginning of what I expect to be sustained commitment to domestic manufacturing. I also want to highlight the role of American innovation in enabling manufacturing advances. Many of the breakthroughs that make modern semiconductors possible originated in American research institutions. Bell Labs invented the transistor. Intel pioneered the integrated circuit manufacturing process. American universities continue to produce fundamental advances in materials science, physics, and engineering. This innovation capability matters for manufacturing because the frontier keeps moving. Today's cutting-edge process will be obsolete in a few years. Staying competitive requires continuous innovation, not just optimization of existing approaches. The United States has advantages in generating the innovations that will define future manufacturing. The workforce challenge in the United States is real but addressable. American universities produce excellent engineers, though not enough with semiconductor-specific training. Companies and governments are investing in education programs to close this gap. Community colleges are developing technician training programs. Immigration policy is being adjusted to attract foreign talent. These efforts will take time to produce results, but I see genuine momentum. The semiconductor industry is becoming a desirable career path for American students in ways it was not a decade ago. The combination of interesting technical challenges, good compensation, and strategic importance is attracting talent. There is also a generation of engineers who built their careers in American semiconductor companies before much of the manufacturing moved overseas. These experienced professionals provide a foundation of expertise that can train the next generation. Their knowledge of what it takes to run successful manufacturing operations is invaluable. The supply chain challenges in the United States are being addressed through a combination of domestic investment and strategic partnerships. Equipment manufacturers are expanding their American operations. Material suppliers are building facilities closer to customers. The ecosystem is developing, even if it will never match Taiwan's density. I want to be specific about where American manufacturing makes the most sense. For leading-edge AI chips that require the most advanced processes, Taiwan will likely remain dominant for the foreseeable future. The gap in capability is too large to close quickly. But for slightly older technology nodes that are still highly capable for many AI applications, the United States can be competitive. For specialized chips designed for specific AI workloads, domestic manufacturing makes sense. For applications where security and supply chain control matter more than cost, American facilities are appropriate. The market is large enough for both. Not every AI chip needs to be manufactured at the absolute cutting edge. There are many applications where established processes at slightly older nodes are perfectly adequate. The United States can compete effectively in these segments while continuing to develop more advanced capabilities over time. Now, let me explain why I would not invest in AI manufacturing in other countries, because this is where I disagree with much of the conventional wisdom. I have been pitched on manufacturing investments in Europe, particularly Germany and the Netherlands. Europe has some semiconductor expertise, particularly in equipment through ASML, and in automotive chips through companies like Infineon and STMicroelectronics. But Europe lacks the ecosystem for advanced AI chip manufacturing. The talent base is insufficient. European universities produce excellent engineers, but not enough of them with semiconductor-specific skills. The ones who do have those skills often emigrate to Taiwan or the United States, where the opportunities are better. The supply chain is fragmented. You would need to source materials and components from multiple countries, each with different regulations and logistics challenges. The just-in-time coordination that chip manufacturing requires is harder to achieve across borders. The regulatory environment is challenging. European rules around labor, environment, and permitting add complexity and cost. I am not criticizing these rules on their merits, but they make semiconductor manufacturing more difficult and expensive. The market is smaller, European technology companies are not the primary consumers of AI chips. Building manufacturing capacity far from your customers creates logistics and collaboration challenges. For all these reasons, I do not see Europe as a realistic location for competitive AI chip manufacturing. They may build some facilities for political reasons, but those facilities will struggle to achieve the efficiency and scale that matter in this industry. I've also been pitched on manufacturing investments in China. China has invested enormous resources into building semiconductor capability. They have ambition, capital, and government commitment, but they face obstacles that I do not believe they can overcome in the time frame that matters. The most critical obstacle is access to equipment. The advanced lithography machines that enable cutting-edge chip manufacturing are not available to China due to export restrictions. Without these machines, China cannot manufacture the most advanced chips. They are limited to older technology nodes that are not suitable for AI applications. Some people argue that China will develop their own equipment industry, perhaps eventually. But developing cutting-edge lithography is extraordinarily difficult. ASML has spent decades and tens of billions of dollars getting to where they are. China would need to replicate that development while simultaneously catching up to continuing advances. The technical challenges are immense. Let me explain just how difficult the lithography challenge is. Extreme ultraviolet lithography, which is required for cutting-edge chips, is arguably the most complex machine humanity has ever built. It involves generating plasma at millions of degrees, collecting the resulting light with mirrors polished to atomic precision, and projecting patterns with nanometer accuracy onto moving wafers. ASML did not develop this technology alone. They built on decades of research from American national laboratories, universities, and companies. They incorporated components from specialized suppliers in multiple countries. They benefited from the accumulated knowledge of the entire semiconductor industry. China would need to replicate not just the machine, but the entire ecosystem that created it. I have watched China's attempts to develop advanced semiconductor equipment. They have made some progress in less demanding applications, but the gap to cutting-edge lithography remains vast. Every year they advance. The frontier moves further ahead. Catching up is like chasing a horizon that keeps receding. The export restrictions also affect more than just equipment. They limit access to design software, to specialized materials, to training and support services. They create an environment where the best engineers prefer to work elsewhere because they can access better tools and opportunities. The cumulative effect of these restrictions is severe. There is also the issue of international isolation. Many companies are reluctant to engage deeply with China's semiconductor industry because of geopolitical tensions and regulatory restrictions. This limits access to expertise, to customers, and to the broader ecosystem that chip manufacturing requires. I have enormous respect for Chinese engineering talent and manufacturing capability in other domains. They have built extraordinary capabilities in electric vehicles, in solar panels, in consumer electronics, in many areas. But for advanced AI chips specifically, the obstacles are too significant. I would not invest there. I have been pitched on manufacturing investments in India. India has a large talent pool of engineers. They have a growing technology industry. They have government incentives for semiconductor manufacturing. But they lack the foundation that this industry requires. India has never had significant semiconductor manufacturing. They are starting from zero in terms of infrastructure, supply chain, and manufacturing expertise. Building all of that takes time, perhaps decades. The AI revolution is happening now. Investment that might pay off in 2035 does not help capture the opportunity of 2025. The infrastructure challenges in India are also significant. Reliable power, clean water, vibration, free facilities. These are not universally available. Building them adds cost and complexity. I believe India will eventually develop semiconductor capability. They have the talent and the ambition. But for the current AI manufacturing opportunity, they are not ready. I have been pitched on manufacturing investments in Southeast Asia, particularly Vietnam, Malaysia, and Singapore. These countries have some electronics manufacturing capability. Singapore, in particular, has a sophisticated industrial base, but advanced AI chip manufacturing is different from electronics assembly. The precision requirements are orders of magnitude higher. The equipment is different. The expertise is different. Having capability in one does not translate to capability in the other. Singapore might develop some niche semiconductor capability, but not at the scale that matters for AI. Vietnam and Malaysia are even further from readiness. I have been pitched on manufacturing investments in the Middle East, particularly Saudi Arabia and the UAE. They have capital, they have ambition, they have government commitment to economic diversification, but they have no foundation for semiconductor manufacturing, no talent base, no supply chain, no infrastructure, no ecosystem. Money alone cannot create these things quickly. They would be building from zero in a domain where catching up is nearly impossible. I appreciate their interest in participating in the AI revolution, but manufacturing is not the right entry point. They would be better served investing in companies that already have manufacturing capability rather than trying to build their own from scratch. Let me summarize why my investment thesis focuses so narrowly on Taiwan and the United States. Chip manufacturing is not a commodity activity where the lowest cost producer wins. It is a capability-intensive activity where decades of accumulated expertise, infrastructure, and ecosystem development determine success. Countries without this foundation cannot realistically compete, regardless of how much money they invest or how committed their governments are. Taiwan has the most advanced manufacturing capability in the world. Built over 50 years of focused development, their ecosystem is unmatched. Their talent is unmatched. Their track record is unmatched. Geopolitical risk is real, but manageable given the global stakes involved. The United States has advantages in equipment, research, and market proximity that make it a viable alternative to Taiwan. Government incentives are addressing the cost gap. Strategic imperatives are creating demand for domestic supply. The foundation exists to build competitive manufacturing, even if it will never match Taiwan's efficiency. Other countries lack the foundation. They might build it over decades, but decades is too long to capture the current AI opportunity. Investment in those locations is more likely to produce expensive disappointments than competitive manufacturing. This is not the answer that most governments want to hear. They want to believe that commitment and capital can overcome historical disadvantages. But in semiconductor manufacturing, history matters enormously. The capabilities that Taiwan has built cannot be quickly replicated. The advantages that the United States enjoys cannot be easily transferred. For investors, this analysis has clear implications. Exposure to AI manufacturing should focus on Taiwan and the United States. Companies with strong positions in these two locations are well positioned for the AI era. Companies betting heavily on building manufacturing elsewhere face significant execution risk. I want to close with a broader observation about what this concentration means for the AI industry. The fact that AI chip manufacturing is concentrated in two countries creates both opportunities and vulnerabilities. The opportunities are obvious. Companies that control this choke point have enormous leverage. The vulnerabilities are also significant. Any disruption to manufacturing in Taiwan or the United States would have global consequences. This concentration is not likely to change quickly. The barriers to entry are too high. The advantages of incumbents are too great. The lead time to build competitive capability is too long. We are going to live with this concentrated structure for at least the next decade, probably longer. Understanding this reality should inform investment decisions. The companies that manufacture AI chips in Taiwan and the United States are strategically important in ways that justify premium valuations. The countries trying to build alternative manufacturing capability face long odds and uncertain timelines. The customers who depend on AI chips need to manage supply chain risk carefully. Let me be specific about what this means for practical investment decisions. If you are considering investing in companies that manufacture AI chips, focus on those with strong positions in Taiwan or the United States. Companies with manufacturing relationships in Taiwan benefit from the world's best capabilities. Companies building capacity in the United States benefit from strategic support and customer proximity. Companies betting on manufacturing in other locations face execution risk that is not adequately reflected in their valuations. If you are considering investing in countries trying to build semiconductor industries, be skeptical of the timelines and projections you hear. Politicians and promoters have incentives to be optimistic. The reality of building competitive manufacturing is far more difficult than their presentations suggest. Projects that seem compelling on paper often disappoint in execution. If you are considering investing in companies that depend on AI chips, understand their supply chain exposure. Companies that have diversified suppliers across Taiwan and the United States are better positioned than those concentrated in a single source. Supply chain resilience is becoming a competitive advantage as customers prioritize reliability alongside price and performance. The concentration of AI manufacturing creates both winners and losers. The winners are companies and investors positioned in Taiwan and the United States. The losers are those who bet on alternatives that fail to deliver. Being on the right side of this divide will have significant implications for returns over the next decade. I have spent over 40 years in this industry. I have seen ambitious projects succeed and fail. I have learned to distinguish between realistic opportunities and wishful thinking. And when it comes to AI manufacturing, realism means focusing on Taiwan and the United States. These are the only two countries where I would actually put money to work. Everything else is either too early, too risky, or too far behind to merit serious investment consideration. The opportunity is extraordinary, but it exists only in places where the foundation has already been built. That is the hard truth about AI manufacturing. It is concentrated, it is difficult, it requires capabilities that most of the world lacks, and it is not going to change anytime soon. Invest accordingly.